Hey there, future Wall Street wizards. Welcome to the thrilling world of trading where fortunes are made and dreams come true. Ever wanted to be part of the exciting world of trading? It's a place where the action never stops and the opportunities are endless. It might seem intimidating at first, all those numbers and graphs, but trust me, it's not rocket science. With a bit of learning and practice, anyone can get the hang of it. Trading is simply buying and selling assets like stocks, hoping their value goes up, so you make a profit. It's like a marketplace, but instead of fruits and vegetables, you're dealing with shares of companies. Think of it like a video game, but instead of digital treasures, you're dealing with real companies and their potential to grow. Each stock you buy is like a new quest, filled with possibilities. Just like leveling up your character, trading takes practice, patience, and a little bit of guts. You'll need to study the market, understand trends, and make informed decisions. But the rewards can be sweet. Imagine the thrill of seeing your investments grow, the satisfaction of making a smart move, and the joy of achieving your financial goals. Imagine having the freedom to manage your own money, potentially growing your wealth beyond your wildest dreams. It's not just about the money, it's about the freedom and control over your financial future. That's the power of trading. It's a skill that can open doors to new opportunities and provide a sense of accomplishment. So, are you ready to embark on this thrilling adventure? The world of trading is waiting for you, filled with excitement, challenges, and rewards. Buckle up, Buttercup, because we're about to dive headfirst into the world of trading. Get ready to learn, grow, and maybe even become the next trading superstar. Before you start throwing money at the market like confetti, let's take a moment to understand what we're dealing with. Investing can be exciting, but it's crucial to know the basics before diving in. So, let's get our definitions straight. Knowing the difference between stocks, bonds, and mutual funds can help you make smarter investment choices. You wouldn't jump into a swimming pool without knowing how to swim, would you? The same logic applies to investing. Understanding the basics can save you from potential financial mishaps. Stocks. Imagine owning a tiny piece of your favorite company like Apple or Tesla. When you buy a stock, you're essentially buying a small ownership stake in that company. That's what a stock is. It's a share in the company's assets and earnings. When you buy stock, you're betting on the company's success. If the company performs well, the value of your stock increases. If they do well, your stock value goes up and you make money. However, if the company doesn't do well, the value of your stock can decrease and you could lose money. Bonds. Think of bonds as IOUs issued by governments or companies. When you buy a bond, you're lending money to the issuer in exchange for periodic interest payments. They borrow money from you and promise to pay it back with interest. Bonds are generally considered safer investments compared to stocks. Less risky than stocks, bonds are like the reliable but slightly boring friend. They provide steady returns but usually don't offer the high growth potential that stocks do. Mutual funds. Can't decide which stocks or bonds to pick? No problem. Mutual funds are a great way to diversify your investments without having to pick individual stocks or bonds yourself. Mutual funds pool money from many investors to invest in a diversified portfolio. This means your money is spread across various assets, reducing risk. It's like having a professional chef create a delicious meal with different ingredients. The chef knows how to balance flavors, just like a fund manager knows how to balance investments to achieve the best returns. So, whether you're looking for high growth, steady income, or a balanced approach, understanding these basic investment types can help you make informed decisions. Happy investing. Trading without research is like walking blindfolded through a minefield. You might get lucky, but chances are you'll blow yourself up. Charts are your treasure maps, showing a stock's price history and trends. Learning to read them helps you spot potential buying or selling opportunities. Think of it like analyzing your favorite sports team's stats before placing a bet. Researching companies is crucial. Understand their business model, financial health, and future prospects. Are they innovating, making profits, or are they sinking faster than the Titanic? Information is key to making informed trading decisions. Remember, a well-researched trade is a confident trade. Ready to jump into the driver's seat? Setting up a trading account is easier than ordering a pizza. Choose a reputable online brokerage platform. Think of it as your trading headquarters. Next, fill out some basic information. like your name, address, and social security number. Don't worry, your information is safe and secure. Once your account is verified, it's time to fund it. Connect your bank account or debit card and voila, you're ready to start buying and selling those assets. Remember, choose a platform with low fees, educational resources, and a user-friendly interface. You want your trading experience to be smooth sailing, not a bumpy roller coaster ride. All right, rookie, time to put your money where your mouth is. But first, let's practice with paper trading. It's like a dress rehearsal for the real deal, allowing you to buy and sell simulated stocks with virtual money. Once you feel confident, it's showtime. Choose a company you believe in, one you've researched thoroughly. Click on Trade, enter the number of shares you want to buy, and hit that Buy button. Congratulations, you're officially a trader. Remember, start small and gradually increase your investment as you gain experience. Rome wasn't built in a day, and neither is a successful trading portfolio. Section 6. Playing it smart risk management 101 for newbies. Welcome to the world of trading, where the stakes are high and the rewards can be substantial. But remember, with great potential comes great risk. Trading involves risk, just like crossing a busy street. You wouldn't cross without looking both ways, right? Similarly, in trading, you need to be aware of the potential dangers and plan accordingly. But hey, we're not daredevils, are we? We don't just jump into traffic without a plan. Smart traders use strategies to minimize potential losses and maximize gains. Smart traders use strategies to minimize potential losses. One of the most fundamental strategies is diversification. This means spreading your investments across different assets and sectors. Diversification. Don't put all your eggs in one basket. By investing in a variety of assets, you reduce the risk of a single investment dragging down your entire portfolio. Spread your investments across different assets and sectors. This way, if one sector underperforms, others may compensate, balancing out your overall risk. That way, if one investment goes south, your entire portfolio won't sink like a stone. Another crucial tool in risk management is the stop-loss order. Stop-loss orders. These are your best friends. They allow you to set a predetermined price at which you'll automatically sell a stock if it starts tanking. Set a predetermined price at which you'll automatically sell a stock if it starts tanking. This acts as a safety net, preventing you from holding on to a losing position for too long. Think of it as an emergency brake to prevent catastrophic losses. It's a way to protect your capital and ensure you live to trade another day. Don't chase returns. Avoid getting caught up in the hype. Just because a stock is soaring doesn't mean it'll continue forever. Markets are unpredictable and what goes up can come down. Just because a stock is soaring doesn't mean it'll continue forever. Stick to your strategy and make calculated decisions. Emotional trading often leads to mistakes and losses. Stick to your strategy and make calculated decisions. Remember, successful trading is not about making quick profits, but about managing risks and making informed decisions over the long term. Section 7. Oops, I did it again. Common trading mistakes and how to dodge them. Even seasoned traders make mistakes. It's part of the game, but learning from them is what separates the winners from the wannabes. Emotional trading. Never let fear or greed cloud your judgment. Stick to your plan and avoid making impulsive decisions based on emotions. Overtrading. Remember the tortoise and the hare? Slow and steady wins the race. Avoid constantly buying and selling. It'll only eat into your profits with transaction fees. Ignoring research. Don't be that person who buys a stock because their hairdresser recommended it. Do your due diligence. Research is your secret weapon. Learning from your mistakes and the mistakes of others is crucial for long-term success in the trading world. Section 8. The learning never stops. Resources to fuel your trading journey. Congratulations, you've graduated from Trading 101. But your education doesn't stop here. The world of trading is constantly evolving, so continuous learning is key. Books, from classics like The Intelligent Investor to modern guides, countless books offer valuable insights into trading strategies and market analysis. Online courses, platforms like Coursera and Udemy offer comprehensive trading courses taught by industry experts. It's like having a personal tutor at your fingertips. Financial news. Stay updated on market trends and economic events by following reputable financial news sources like Bloomberg, Wall Street Journal, and of course Mad Money. Section 9, go get 'em, Tiger, you got this. The world of trading can be intimidating at first, but remember, even the most successful investors started somewhere. With the right knowledge, tools, and mindset, you too can navigate the markets and potentially achieve your financial goals. Remember, start small, do your research, manage your risk, and never stop learning. Embrace the journey, enjoy the ride, and who knows, maybe one day you'll be ringing that opening bell on Wall Street. Now go out there and make some money. Booyah, make